All right, we're live. So welcome back to Dapp University. So today we're going to talk about some big reasons why we can still see higher cryptocurrency prices in 2021 than we see today, and potentially even break the new all-time highs that we printed, last month. Because a lot of people are sitting around wondering like, hey, what are the big catalysts for cryptocurrency coming up? Like, have we exhausted everything? Have we just used up all our energy? Are we going to go into a bear market? Or are there actually things on the horizon that can cause us to trend higher? Okay, so I'm going to look at that in this video. Some reasons why I think that we're still going to go up from here, and what you need to watch out for before we can really decide whether that's the case or not. All right. So before we get into that, if you're new around here, hey, I'm Gregory, and on this channel, I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to learn how to become a blockchain master step by step, start to finish, then head on over to dappuniversity.com/bootcamp to get started today. And last but not least, as always, like nothing I'm saying in this video is investment advice. I'm not making these videos. They're not designed to tell you to buy or sell any cryptocurrency based on this information. There's lots of scammers down in the comment section below. Just ignore them. I'll never give you my phone number or ask you to invest with me. All right, so we got people jumping in the chat here. We got, let's see, Yassine, Andreas, Alan, Aaron, Affordable Bruce Wayne, Bearzon, Barrett, Brett, Youssef, Jarrett. Welcome, welcome, welcome. All right, so let's jump into this. So, we saw this crazy crypto crash happen over the last month. And it's kind of gotten people like really freaked out, like saying, hey, are we going to go into a bear market? Is this crypto bull run that we've been a part of, is it totally over? And one of the first things I want to check out today are some reasons why I think that we can actually trend higher from here, okay? And what we need to watch out for. And as always, you have to think about this in terms of confidence. We're not always sure that these things are going to play out properly, but let's look at some top reasons for starters. Well, let's actually just pull up the CoinGecko charts and see where we are with the Bitcoin price and see where we've been before. Okay. So Bitcoin is currently trading about $40,000. All right. And, we made a high of about $65,000 recently. So we're still, significantly below that. But the important thing to see here is we've been on a trend upward for the past several days, or we've been breaking out of this downward trend, and we're trying to break out of this to where we can actually confirm a bull trend upward that can continue this momentum that we've seen over the past, 6 months to a year. So the first major reason why I think that we can still trend higher simply is because people are still hungry for gains. All right. So there's so many different reasons why you might want to buy Bitcoin in the first place. Of course, it has this narrative behind it as being an institutional grade asset, store of value, a safe haven against inflation. But the number one reason that I think people are still buying Bitcoin is for growth, all right, as a risk asset, basically to make gains. We have people who are still very hungry for those gains, all right, and more hungry to buy them with leverage and to make profit with them by longing them rather than shorting Bitcoin right now. Okay, so that's the number one reason. So some of these are going to be review that we talked about in the video yesterday. I'm going to talk about some new indicators that I see here in a second. But that's just the first ground rule that I want everyone to understand. Like, there are these other reasons that make up more support for this thesis. But I think that's the number one thing is people are still hungry for more bull action. Okay, and that's actually what gets people to buy in the first place. So another indicator, so another thing is like the narratives for Bitcoin are actually playing out in the sense of, yesterday we saw the video clip of legendary investor, Paul Tudor Jones, talking about how he's just freaked out with everything that's going on right now, how he actually is, worried about what's happening with the Fed. And, when he was giving investment advice, he was talking about a 5% allocation to Bitcoin, among other things as well. But, it's a huge stamp of validation that, the Bitcoin narrative as a hedge against what's going on in the overall broad economy is still something that is widely adopted among people who know what they're talking about. So that's huge. The macro narrative for Bitcoin is still playing out. We are starting to see effects of inflation in the economy, as actually measured by the Consumer Price Index, which is the yardstick that the Fed chooses to measure inflation themselves. All right, so that's another thing. But I want to look at some actual brand new indicators that are measurable that you can take a look at on the screen here. So number one is, I saw this floating around yesterday. Let's just pull it up here. Of course, we do see some, sentiment here. People saying that, in their view, that the bottom is in, that we've seen this correction, that we're going to make new highs from here. All right, just general sentiment. I'm starting to see this. We saw a lot of fear over the weekend. People online were just like calling for bear, calling for bear, calling for bear. But that's generally a situation where, hey, maybe, it's the opposite of what everyone's thinking. But This one indicator that I want to talk about here, which is the stablecoin oscillator for Bitcoin. Okay, so basically what this indicator is, all right, it looks at a ratio of Bitcoin versus stable coins on exchanges. And this indicator has actually tracked pretty much every single dip in the past. Now, this is a new metric to me, so this is not something I've personally verified in the past and back tested, but if we can take this at face value as actually being a pretty good indicator and actually representing history pretty well, then this could be one of those things where we get confirmation that, this is a dip. We see lots of people saying, hey, this is a dip, this is a dip, this is not game over, but this indicator right here is actually pretty compelling. So what it does is it measures the amount of Bitcoin on exchanges relative to the amount of stable coins, and when the ratio's moving average enters a lower bound, showing in green on an accompanying chart, it's time to enter BTC USD. So that's based on this indicator, which has basically been true every point that you track it in the past. Okay. So if it holds true for the future, then that would indicate that the price correction that we've seen in over this past month or so has been a dip, which would indicate, just logically speaking, that you'd see a higher price trend from here. Okay. Now, it could also mean a relief rally, and then we continue into a bear market from here. So, as always, you have to think about these things in terms of probability. So, how will you eventually get confirmation? Well, there's no perfect confirmation, but definitely one thing that I'm seeing people watch out for a lot is, Bitcoin getting above some critical price levels. So what are some of those price levels? Again, I'm not going to make myself look like an idiot here by trying to do advanced technical analysis. That's frankly beyond my pay grade. But I will tell you that the technical analysis I'm seeing lots of other people who I, listen to talk about is, Bitcoin getting back above the 200-day moving average. So basically, this is if you take Bitcoin's price and you look at it over the past 200 days and you generate a moving average. This, moving average is pretty critical when you're talking about, Bitcoin in bull markets, staying above that price, using it as support. You can see here, the red line on the chart here. And then basically, Bitcoin needing to get back above that price in order to get pretty good confirmation that we're likely going to continue on with a bull trend from here. So we're significantly below that. Bitcoin's trying to claim $40,000. We had two green candles 2 days two green daily candles in a row. It'd be great to see a third one, but we're trying hard to keep that. And we need some significant action in order to reclaim this critical level up here. And so that's what I'm seeing a lot of people watch out for. And I think it's, stands to reason because, simple moving averages are kind of a no BS, indicator that just kind of makes sense based on historical price motion when you're talking about the momentum of the asset, because that's essentially what Bitcoin needs. Is it needs momentum to continue on with that. But I think it still can reclaim a lot of that momentum because people are still being hungry for gains, the macro narrative playing out for Bitcoin, the indicators showing things. You can also get social sentiment, all right? So if you look at like the Bitcoin Fear and Greed Index, I talked about how over the weekend, everybody was just totally, bearish. Everybody just seemed freaked out and panicked. And you can actually see a reflection of that, like on the Bitcoin Fear and Greed Index. Over the weekend, it was an extreme fear. I want to say it was like around 12 or 15, maybe 17, something like that. But we're way closer to middle here. Okay. Which over the weekend, it's some of the lowest that I've ever seen it after that major crash. All right. So it looks like people are, the social sentiment starting to get closer towards the greed side of things, which I would expect if we were to continue on in a bull market, we would, firmly get into this green category. I mean, we were part of extreme greed when we saw Bitcoin, during May, basically. We were in extreme greed territory, early May. So I would expect that social sentiment indicators, you could look at that. You could look at these technical indicators. So another reason that I think we're going to see bullish catalysts and buying pressure with ETH and Bitcoin and others is basically we're seeing traditional finance move more and more into crypto and support it more and more. So let's see if I can pull this up here. It may not let me read the article because I think it's a paid source here, but we do see more support from cryptos by this free article limit. Hold on, let me just see if I can pause it on my screen here. So let's actually do this. See if I can do a trick. Let's do console. All right, sorry everybody. All right, so it's not letting me pull it up. I'll just refresh it on my screen here. But basically, Goldman Sachs, let me just see if I can refresh it and at least read the headline. Goldman Sachs expands into crypto trading with plans for Ether options. All right, so we're seeing this type of thing happen over and over again, where traditional finance is expanding more and more into crypto, offering crypto products. And you see options trading, basically letting them trade derivative contracts with options based on the price of ETH in the future. So, I mean, this is big because gives people a new way to basically trade cryptos. And we have this on the crypto world already, but for, traditional finance, this is big too. All right. And there's just basically more and more reasons why people could come in and, bet on the price of ETH. Now, this could be a bearish thing if we're in a bear market, right? People could be betting that the price could be going down. We did see that with Bitcoin futures launch in 2017, corresponding with the top. But the bigger picture here is just more and more support for cryptos. And that's part of the thesis for cryptos long term. When you think about network effects, if we talk about cryptocurrency prices having a high correlation with the network effects in the sense of like Metcalfe's law. So the idea that, cryptocurrencies, the more people use them, that tends to have an exponential relationship with the actual price of the cryptocurrencies. So basically, think about a telecommunications network, like a phone network. If there's 5 connections, the square of that's 25, right? 10, et cetera, right? Is an exponential relationship. And so the more you can do stuff with cryptocurrencies, it increases the demand side of things, which generates more users. Okay, so if you have a cryptocurrency network that lets you do DeFi, that lets you stake, that lets you pay for things, that plugs into traditional finance, that people can, trade derivatives contracts on top of it, that settles value from credit card companies, all this type of stuff like Ethereum, then that generates more demand for the cryptocurrency itself, which increases the number of users, which tends to have an exponential relationship with the actual price of the asset itself. And so that's another reason I'm super bullish on ETH. Super bullish on the crypto space, is because we're creating more and more reasons why people would actually want to use it in the first place. Okay. And that's, just adds to this bull thesis of why, we can see higher highs in 2021 than what we've seen so far. Now, as always, there's no guarantees with this type of stuff, but one of the big questions that people have been asking themselves is like, hey, what are the bullish catalysts? All right, what are we looking on the calendar for? I mean, we saw so much happen in early 2021, the Coinbase IPO, with all the Tesla news, all this type of stuff that just came out. It was like, new exciting things day after day after day. Well, I think we're still seeing lots of these things happen. Not necessarily as frequently and as fast as we were in 2021, but doesn't mean we have to move up in price as fast as we did in 2021 to still have a lot of upside potential in this year alone. Okay. And so one of the last big reasons why I think we're primed for a price increase is the fact that we have cooled off. Okay. So if you look at like the on-chain indicators, so let's pull it up here. So if you look at the on-chain indicators that basically tell you what's happening with the prices, like the Bitcoin NUPL chart, for example, that we've checked on quite a bit on these live streams, it basically tells you the froth in the market. So, it's not a perfect indicator by any stretch of the imagination, but if we look at past history, every time Bitcoin got in this euphoric level, it was basically the start of a long-term top. And we kissed euphoria here, which we don't know for sure it's going to be a long-term top, but, we quickly corrected. Okay. So now we're down in the yellow territory. All right, which basically gives us more headroom to rise if we are to ever enter into this. Because a lot of what you think about here, this is, net unrealized profit loss. A lot of this has to do with the pace that the price increases. So basically, if you look at 37,000, we're currently at 40,000 with a NUPL metric of 0.5. So the last time we were at 40,000. We were at 40,000 up here at euphoria. Okay. Basically kissing euphoria almost. All right. 54,000 kiss, also bullish. So it basically gives us more headroom in the market. So let's see here. but yeah, as of course, as always, time will tell. I'm gonna keep an eye out on this. These technical indicators for sure. Again, I don't pretend to be like an expert in technical analysis or anything like that. I'm not not really into astrology, but I do think it stands to reason that this moving average is important as an indicator of how bull markets tend to function, and I think it makes sense that reclaiming this 200-day moving average is pretty critical for Bitcoin to confirm that a bull market is still in play. So let's see here. I think let's just make sure the stream's okay. I think the stream's okay. So anyways, I do think it makes sense to keep an eye on that to make sure that this is something that kind of confirms our trend. Okay, someone says freezing time to time. It looks like it's frozen now. My connection here is 100% looking at my live streaming software. Okay. Yeah, I'm not sure what's going on here. I've got full connectivity. Okay. All right. So anyways, yeah, I do think this 200-day moving average is pretty good indicator. All right. So let's see here. So another thing to think about, especially from a technicals perspective, like more reasons why people want to buy in all the cryptocurrencies in the first place. I mean, this is why I'm super bullish ETH now in the somewhat short term, okay? Because we do have EIP 1559. Somebody says I'm breaking the internet. Yes, somebody says YouTube. Yeah, I think other people actually having this problem with YouTube as well. So I don't know why it's doing this. Yeah. Sorry, everybody. I've got perfect connectivity on my side. I can show you the screenshot of my broadcasting software. It's like totally green. Anyways, so other fundamental reasons, like we're talking about the thesis of more people using cryptocurrencies and that actually having an impact on the price itself. Of course, I'm super bullish on ETH in the short to midterm, like not even just for the long term, short to midterm, because we do have a lot of stuff rolling down the pike for ETH. So, I mean, next month is July, all right, and that's that's our slated release date for EIP 1559, which is the big improvement proposal for Ethereum, where we're talking about changing the fee structure for ETH and that having an impact on the actual price of the asset itself. Okay, potentially being a deflationary asset at times of peak activity because part of the fee that you pay on the Ethereum network gets burnt in those transactions. So that is slated for launch, next month. We'll see if that gets pushed back. All right, these things are kind of notorious for getting delayed. But if we just take it at face value, we say, okay, this is probably going to launch when we think it's going to. That's going to be bullish for ETH. We have layer 2 scaling solutions really rolling out in full force. Man, everything that's been happening on the Polygon network has been absolutely crazy. We've seen all of the DeFi explosion happen over there. And I actually think I'll probably make some more videos on that type of stuff. So if y'all want to see that, let me know down in the comment section below. Talk more about DeFi here. So all those fundamentals are super, super strong and are more reasons why I think that people are just going to jump on this quite a bit. So see any questions here in the chat. Somebody says over 60% of Ethereum's hash network is now against EIP 1559. I haven't seen the hash power numbers. So let's see. Another big reason, too, the metric we saw yesterday was tipped off by my good buddy Anthony Sassano over at Daily Gwei, talking about a quarter of ETH's supply is locked into smart contracts right now. It's huge, right? A quarter of ETH supply is basically being productive. It's not sitting on a centralized exchange, waiting to be sold, looking for a peak in the price. It's actually doing something. Now, a lot of that's going to be locked up in the ETH staking smart contract for ETH 2.0. And, once the merge happens and people can withdraw, maybe we'll see, some of those profits taken there. But yeah, I think the whole point here is that ETH can do things, and there's lots of reasons why people want to hold on to ETH long term and not just instantly sell it. But do I think the NFTs are dead? That's a good question. So I think it's very likely that NFTs have run a hype cycle. Whether that hype cycle is a long-term hype cycle or just a short-term bubble, time will tell. But the fundamental value proposition of NFTs, I don't think has changed long term. It's just like cryptocurrencies. Cryptocurrencies could the current valuations of cryptocurrencies be higher than? Could they be overvalued? Very possibly. Okay, but that doesn't. There's still a base amount of value there, right? So you could still see, so for example, if you looked at the cryptocurrency markets here, you're talking about their actual valuations. Now they're notoriously hard to value in the first place, but if you look at this chart here, you could argue that you could draw a line through here and basically say, you could still expect a parabolic increase in the prices themselves when we talk about the network effect, having an exponential relationship with the number of active users, all that type of stuff. You could plot user growth and you could draw a parabola through here, but the parabola goes like this, all right? And it's a more gradual parabola. And then you could say this entire thing here was a bubble, but this parabola was still the base case for the fundamental value itself, okay? You could do that kind of thing and say, hey, this was a bubble over valuation, but this is closer to the fair value right here. And that's one of the reasons you don't see people selling maybe below this line, okay? So, I mean, you could argue with that in either direction, right? But, so what I'm trying to say here is you can see these things still having a parabolic increase in price, but still have temporary periods of overvaluation or bubbles. So a very similar type of thing could be there for NFTs. NFTs are harder to value, in my opinion, in terms of, what's a CryptoPunk worth? What's this worth? What's that worth? So from a digital collectibles perspective, but I do think that we have a lot of major use cases for NFTs that will work outside of just digital art and collectibles. We talk about anything that needs to be non-fungible and put on the blockchain, insurance contracts, tickets, property deeds. Now, some of this stuff basically is facing regulatory constraints. It's not a technical problem. It's not very hard to model the deed to a property and put it on a blockchain, but you've pretty much got a ton of regulatory friction to doing that. You can't the law is not just going to automatically honor property deeds on a blockchain, and it may not be incentivized to do it in the first place. So there's lots of friction there. But the roundabout answer to the question is I don't think NFTs are done long term, but very possibly could have run a hype cycle, and we don't know if that hype's going to come back anytime soon. Somebody says if ETH goes up because of fundamental stuff, do Sol and other competitors go down? It's hard to say. Especially if we get into a crazy bull market, it's kind of irrational and detached from fundamentals in the first place. We see lots of projects just gaining valuations that don't really have any users. So. So somebody says long-term tension investment in ETH, more smart contract adoption means higher dollar per ETH, making contracts less useful. How to resolve this? L2s. These mean you need less ETH. So not necessarily. It depends on the L2 you're talking about. And this is where, I kind of can draw some distinction between L2s and, side chains. And some people don't like calling them side chains, like calling them scaling solutions. But basically, you can have L2 solutions that don't require you to purchase a different cryptocurrency. Okay, so that's important to understand in the first place. So that won't necessarily reduce demand for Ether. The other thing about it is, you'll still have plenty of people who use layer 1 Ethereum that don't even use layer 2s because they want the full security of the Ethereum chain. So, about basically whales, and there's plenty of whales on the Ethereum network. People with massive, massive, massive balances, and they're making massive gains, okay? That can still basically support the demand for ETH as is, okay? So I don't really see that having a negative, price impact. And we see ETH gas prices have dropped quite a bit. but it doesn't correlate to the price drop that we've seen in Ether lately. Okay, so basically, ETH gas prices come down quite a bit, dropped by orders of magnitude. But the ETH price has not dropped by orders of magnitude. I mean, gas prices have dropped like, I don't know, like 90% or something like that for lots of different reasons. But the ETH price did not drop 90%. Somebody says, won't L2s become irrelevant when ETH manages to scale, keep fees in check? I mean, right now the fees are great. Yeah, it's a good question. So long-term solution with ETH is a combination of layer 2 scaling solutions and ETH 2.0. So getting these things together, because part of it talking about throughput, it's not just the fees. So you want to handle more transactions per second. And if you want to get something like, 100,000 transactions per second, you need both basically together. Somebody says, would you encourage staking ETH? Because that's what I'm doing. Depends on how you're doing it. If you're talking about staking it by actually running a validator and locking up 32 ETH, which I have a feeling that's not what you've done. I mean, it might be. If you did, let me know. You would know if you did, because you have to go through some pretty complex instructions. You have to set up a validator node. It's a pretty technical process. If you did that, then I guess it's too late because you can't get it back till the merge happens. But that's okay. I think it's still okay. And there's lots of reasons why you wouldn't want to do it, because, well, it's locked up to the merge happens. You don't know exactly when that's going to be. The price of Ether could change to the downside between now and then. You have to go through all those setup steps in order to do it. It's kind of a pain. And so a lot of people just want to stake like on an exchange that offers those staking services. They have some sort of lockup period as well. And I think a lot of those exchanges, basically what they're doing is just running their own validators on the back end and then making a spread and profit off of your staking. So that they'll give you a reward that's, maybe a little bit less than what you could do natively, and they'll just take a profit. So I have a feeling that's what you probably are doing. And so if you've already done it and you're locked up, it just depends on how much it is. Like if it's your entire portfolio and your portfolio is, it's like all your portfolio, like your entire net worth, and I don't know, I wouldn't personally do that. But if it's just a small amount, I don't know if it really matters. Or if you can get it back anytime you want to, then that's a different story too. Somebody says ETH will flip BTC soon. It might. I think it's very possible that ETH can flip Bitcoin simply because there's more stuff you can do with it. If you go back to the thesis of the more you can do with the cryptocurrency, the more demand increases for the cryptocurrency itself. And if you're talking about if cryptocurrency has sound economics and that you can't just create more of it willy-nilly, then that logically has an impact on the price. And there's more reasons why somebody might want to hold ETH than Bitcoin. Now, that being said, it still has to attract a more total number of users for those multiple reasons. But I think time will do, like, I think that will happen with time. There's no guarantees. Not saying it's going to happen, just very possible. Oh, I think my camera battery died here. Hold on one second. Let me just, don't worry everybody, I'm still here. Let me just do this. Hold on. All right, here we go. I'll go to my webcam. My DSLR just died. My whole streaming setup's like not doing great this morning. So what are my thoughts on Gitcoin? I think Gitcoin's awesome. So thoughts on future of sidechains and L2s versus zero knowledge proofs. So basically, I think that I think the playbook is really optimistic. So basically, like there's multiple scaling solutions for Ethereum. We have things like Polygon Matic, which I'm still gonna call it a side chain. I know people don't like it when I call it that, but basically it really is a different blockchain that has its own cryptocurrency itself that bridges over to Ethereum, and you can do stuff with it. There's all these other apps that live on that ecosystem. It's fundamentally different from the Ethereum main chain. Okay, as it's entirely separate. It's just a separate thing. It has its own security model. Ethereum has its own security model. You have that. You have actual layer twos, which I'm keeping a different category. Offends people, but basically that derives its security from the base Ethereum chain. It literally sits on top, and that's why I call it more of a layer two. And so essentially, there's two different prominent scaling solutions for this, which is essentially roll-up based layer twos, or optimistic roll-ups, and then zero knowledge based roll-ups. Okay. So the playbook tends to be optimistic based solutions in the short term because it's easier to move your apps over, and then more zero knowledge based solutions for the long term. So why? Well, basically optimistic rollups, easier to move your apps over, but there are some trade-offs. There's the delay in withdrawals. There can be some workarounds to make that happen faster. Okay, but long-term zero knowledge seems to be the preferred method because there's minimized trust, fast withdrawals, fast transactions, cheap transactions, but the real friction is you basically have to rewrite your entire app to port it over to zero knowledge-based solutions. So and we'll see if we even get to that step. It could be a case where people are fine with just optimistic solutions, optimistic-based solutions. It could also be a world where people are just fine with side chains. I mean, maybe the world actually does move towards more multi-chain, type of thing, which I don't know. To me, still though, long term, I don't think I'm super convinced of a multi-chain future. It just depends on what you mean by that. Multi-chain in the sense that there are lots of blockchains with some users on them, I think is valid, but I think when people say multi-chain, they just talk about like a world where everybody's got, a roughly equal share of the activity for blockchain technology. And I just don't think that that's probably going to happen. I could be totally wrong, but I mean, the world tends to not work that way, where you tend to see a high concentration around like one or two things. Like think about search engine. Like we're technically in a multi-search engine world, but we're not really like we have Bing, we have DuckDuckGo, but Google still has like 93% of the search engine, market share. So, are we in a multi-search engine world technically, but really are we? Not really. Basically everybody uses Google. So we'll see. We don't know if that distribution plays out with blockchain technology, but time will tell. All right, everybody. So that's all I got for today. As always, smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. That really helps these videos out so that more people can learn about blockchain. If you're as fascinated with this technology as I am, you want to get your hands dirty, how can you get started today? You can go to my YouTube homepage, find my free courses there. They're like Udemy courses, but they're totally free. And if you like those, you want to take the next step, or hey, maybe you want to take a master shortcut entirely, I actually become a blockchain master step-by-step, start to finish over at dappuniversity.com/bootcamp. All right. You don't have to be an expert to get started today. I've helped people with zero coding experience become real-world blockchain developers in a matter of months. So that's all I've got. Until next time, thanks for watching.